Today, you speak on this on the day that Bitcoin has broken through 100K. Did you think this would happen this year? Do you think we will see options on other, specifically ETH ETFs?
Great question. I think we.
How do you see things playing out for the next, 6 months?
I have not actually, I think, shared my view on this publicly.
GM or indeed GN, and welcome to another interview here on Coin Bureau. And today we are being joined by Jeff Park. He is a portfolio manager and the head of alpha strategies at Bitwise Asset Management. So hopefully we're going to get a lot of alpha today. So Jeff, welcome to the Coin Bureau.
Thanks for having me, Nick. A pleasure to be here.
Great, man. So we got a lot of stuff to cover today and likely dive into Bitcoin breaking through 100K, intricacies of options, volatility skews, and a lot of other alpha there from the head of alpha strategies. But for our audience, just to kick things off, can you give us a quick intro into you and your background? I know that you used to work in TradFi now. And how did you get into crypto? And when did you buy your first crypto or first Bitcoin?
Sure.
I assume Bitcoin. Assume it was
Love
Bitcoin,
it.
Your first crypto, right?
Yes. Bitcoin is my first love and will always be my love in the crypto asset ecosystem. I started my career actually at Morgan Stanley as an exotic equity derivatives trader, but maybe equally noteworthy is I started my career in 2008. And so after graduating from college with a lot of optimism, a lot of things I felt I had learned from school that I was excited to apply, I had a very brutal awakening in realizing that none of the things I learned at school actually was relevant in the financial crisis that was to unfold. And all the models broke, right? We know the great financial crisis was a black swan event in ways that we're still recovering from as the psyche of a nation and the world. And for me, I think there are two things that happened. One was I've always loved math, and I've always been interested in the idea of making better risk judgment with a probabilistic mindset. And exotic equity derivatives is exactly that business. So I felt that I had a great appreciation and the toolkit to then understand the possibility of Bitcoin when I learned about it on the trading desk. The thing that was most appealing to me about Bitcoin wasn't just the philosophical element of a censorship resistant asset that is removed from the system of compliance that we know within monetary policy frameworks today, but it's also the fact that the quantitative characteristics of Bitcoin makes it a truly one of a kind asset. And it's a hyper financialization in a different way that the world hasn't seen before. And for someone like me who really is excited by those types of things, I fell in love with it immediately. And so it took a little bit of more time, I would say, as I was watching it. And then my first Bitcoin purchase was in 2013. I just couldn't wait anymore. I just had to get involved. And I remember one of the things I still was a little bit unsure about was custody. And had I been maybe a little bit more forward looking or a technologist at heart, I would have wanted to solve the custody problem by myself. But the reality is, I'm in Wall Street, I'm in trading, and it's not something I think about a lot. I expect the system to just work, right? Of course it doesn't. And so when Coinbase launched in the United States, for me, that was a little bit of a breakthrough moment in imagining the ease of a regulated and well-funded entity with excellent leadership that could onshore crypto to the United States. And so that's why in 2013, I was able to pull the trigger. And it's been an incredible journey. I mean, I can't believe that it's been over now 10 years following this little, crypto asset grow into maturity. And that now it's 100K.
Wow. Yeah, to have the conviction in those early days, man. 2013. So you probably must have been one of Coinbase's first customers. Well, they launched in 2012, right? So
it's so funny you say that. Yeah, because I still have emails from when I was trying to buy it, and customer service back then used to respond to you and actually help you.
Brian Armstrong responded to you.
I wish.
Oh man, that's crazy. Yeah. Okay. Yeah. So it's I think that's one of the things. I think, especially from the same perspective as us, you were used to work in TradFi. When you work on that side of the wall and you realize, exactly that it's not specifically fit for purpose, and then the traditional financial assets as they are structured today, just can't compare to the monetary qualities of Bitcoin. So yeah. Now I want to come back. Obviously, you are a prolific tweeter, and you got some of the best takes on FinTwit and crypto Twitter, I think. Obviously, you know we're going to get to the options in a bit, but something you've also been very bullish on and super bullish on is MicroStrategy, and you have compared it to, in one of your recent tweets, you've compared it to the time before Bitcoin ETFs were approved in terms of how much of an explosion will be, and that we could actually surpass it. And can you expand on that particular tweet?
Yeah, I'd love to. Um, there are fundamental characteristics of MicroStrategy that is appealing, and there's also technical characteristics of MicroStrategy that I think is equally appealing. Some of them are structural, some of them are due to the environment for which the adoption curve for Bitcoin is still being hampered in ways that the system is digesting. But at the very high level, I will be the first to admit that MicroStrategy was not something I was immediately in love with at the beginning of my career. In a way, I had also recognized that MicroStrategy is a competitor to the Bitcoin ETF, and it would, in fact, be a tooling used by folks to get exposure to Bitcoin. Even though there's, of course, basis risk to that, it's not a pure representation. And so it's always been in the back of my mind. I've studied it, I looked at it, but it was, to me, at first, what looked like an imperfect proxy. And I love perfect boxes. So I said, Bitcoin ETFs is better. But the more I spent time on it, the more I realized there's actually various levers at play for MicroStrategy that is not just about the Bitcoin thesis. There's actually a different scarcity thesis behind MicroStrategy that I actually know very well because I come from the credit investing and hedge fund world in the past 10 years that I spent before joining Bitwise. And that was the moment that I had opened my eyes to then recognizing what MicroStrategy truly is. So the thing that I always tell my TradFi friends when they ask about what is going on with MicroStrategy, how could it be worth so much more than the Bitcoin that's on its balance sheet? I immediately tell them that's the last thing you should be concerned about. The first thing you should ask yourself is, why are people buying the convertible bonds of this capital structure without there being enough supply, and this is being gobbled up? That's the first question you have to ask. And then you have to understand the investment management industry is built off of an apparatus for which performance is a big factor in how asset gathering works. And if you look at all the corporate bonds in America over this year and recognize where your peers have outperformed you as a benchmark or not, one asset sticks out. It's MicroStrategy bonds. Those bonds are up 200+% this year in ways that no corporate bonds could ever behave that way with the scale that MicroStrategy provides. And so if you're a fund manager, you might not know anything about Bitcoin. You might not even know about MicroStrategy, but it popped up on your Bloomberg. And now you're thinking, man, what is that thing that I have to own? Because all the other folks who had it are beating me. And now I need it to even compete on an index basis that is the investment management industry. So what I'm trying to hint at is that the credit paper itself has some scarcity value. There are people that want it and cannot get it. And once you introduce scarcity to the financial services industry outside of the hard asset of Bitcoin, you can do a lot of funny things. And pricing is irrational and it becomes emotional. And what we have seen play out this year is a magnificent and almost surgically and clinically accurate delineation of that investment thesis. The credit essentially is a vehicle that is subsidizing equity with leverage in ways that benefit the residual. And if you imagine how underlevered MicroStrategy generally is and how much more leverage could potentially be introduced, the kinds of dilutions that would be anticipated through those convertibles makes MicroStrategy maybe the only asset in the world where people are excited to be diluted, which is in itself the most counterintuitive thing. This is why TradFi people don't understand it. Why would you buy something when there's ATMs completely diluting you all the time? And this may be the asset where actually dilution is the goal of the long-term thesis of value accrual. That's why when they came out with the $1 billion convert plus equity program, the stock ripped. And so it's financial engineering at first. The second thing is you have to recognize capital structure arbitrage works in a way where equity is the last piece of seniority for which leverage is subsidizing some of those gains. So there's inherent leverage with MicroStrategy, which is why it does behave with extra volatility and beta to Bitcoin. That should make sense to most people. And then the third thing is, well, how is MicroStrategy doing it? And it does then come to Bitcoin, which is that there really isn't any other way to do it without bringing volatility into this apparatus I just discussed, where credit investors don't want volatility, equity investors want volatility, and you're arbing it. And that's a beautiful thing. Once that made sense to me more clearly, and who are actually the people buying the converts, I realized that this is maybe the most imaginary monetary experiment of our times for a corporate balance sheet and a treasury. If you think about where the government is today in wanting to bring ideas of yield curve control back to bring some elements of quantitative easing into the macro system, I see convert issuances almost as a kind of a yield curve control of what a corporate issuer can do with an underlying asset that is Bitcoin. And that perspective is actually more of a macro investor than it is a long short equity value-based discounted cash flow approach. So for those who are immensely focused on the premium and the discount to the balance sheet of the Bitcoin assets, that's only a part of it. And you need to kind of zoom out and think about the bigger macro picture and the supply demand and the marginal pressures of those particular actors. Now, there's also a technical thing, which I should mention. There are elements to which I think the capital structure is still really clean at MicroStrategy. I mean, there is no actual secured debt, for example. There's no first lien, second lien debt. It's all unsecured. So there's room for more leverage, actually. There's also more room for pref equity. There's all kinds of things you can do to continue to juice the equity. This is the core of what corporate treasury strategies ultimately are in capital efficiency driving goals. And then the second thing is there's events like index inclusions and other things that could happen in the near future that create technical demand regardless of the fundamentals. And those things are also important, which I think people are focused on and interested in seeing this month.
Yeah, that's the big one, the index inclusion, right? Because then passive fund buyers will have to just bid irrespective, right? Just going back to who's buying these secured unsecured notes, I'm curious, like, do you have a sense of what kind of investors are actually? Is it credit funds, hedge funds? Is it other types of institutional investors? Do you have an idea of the kind of profile of client who's buying this?
Yep. A lot of it is convert arb shops, and you can pull them up to see, and you'll see names like Linden and Whitebox and others who are known to participate in the convert arb space. You do occasionally see some long-only credit funds as well, and I do think that segment is growing. And there are larger asset management companies as well that would manage mutual fund type structures as well that I find now on the balance sheet too. And so I think it is diversifying. And the trend is in that direction. Though I would still echo most of the interest is still coming from convert arb traders, which is actually the arbitrage. The arbitrage of the opportunity has to be monetized with somebody who's sophisticated enough to recognize the volatility yield can be capitalized.
Yeah, really interesting. I guess it depends on how long that premium will remain. I think it's been quite persistent. So yeah, as long as the premium is there, it just makes sense for Michael Saylor to keep on printing or printing and buying Bitcoin.
The number one bear case too that I often hear is like around this idea of like if Bitcoin crashes, right, to the point where the balance sheet is impaired and Michael Saylor is forced to liquidate his Bitcoin holdings, like what would that do? And there are many things that are flawed in that question. The first is, again, these are unsecured. So there actually isn't like a clean liquidation trigger to begin with. They're not secured assets. The second thing is what usually happens in credit is that restructurings occur amidst those who can organize once these distressed events occur. So you basically create like an ad hoc group and they come together and they will most likely just find a way to convert their impaired convert into equity, right? So if the convert is trading at 40 cents, they will find a way to impair that into some kind of pari passu equity neutralization. And that kind of maneuvering is ultimately what is more likely to happen, even in the remote case that we talk about something as a tail event that would affect MicroStrategy in that way. So it's a little short-sighted to lean on that as a reason to not invest. Like you'll have inklings of that path dependency, but it won't play out the way you think, where it's just all of a sudden just going to blow up.
Okay, makes sense. Okay, moving on now into the option land, because obviously, like I said, you were one of the first guys who talk, who explained the concept of how important the options, more specifically options on BlackRock's IBIT Bitcoin ETF, right, and the implications that it have on the market. And it's been over 2 weeks since they launched, which many thought went well, like on the first day, 1.9 billion in trading and all that. So I'm keen to hear from the man himself. What are your key takeaways from the launch and what we've seen over the past 2 weeks?
Yeah, it's been a wild, wild ride.
Yeah.
So many things have happened. In fact, even after we discussed the launch of the Bitcoin ETF options, just this week, actually, SIBO came out and launched their Bitcoin ETF index options, which is a different category of a product, but equally important systematically. And I think we're just getting started to see what kinds of innovations will happen on the back of these structures. The few things I took away: number one, I was surprised to see that people, in fact, did enjoy buying wings. I did imagine it, and I posted about it, that the arbitrage of options really is long dated, very far out of the money calls and puts, where you will find the ability to kind of arbitrage the inefficient maintenance margin systems for the risk you're actually taking on. And you saw it, like from day one. People were buying very far dated and very out of the money calls, and so it happened faster than I thought, which is cool to see. And you can still see it today, even outside of the volatility smile. You can see where the biggest open interests are by strike. And what you see is actually a big chunk of open interests are on the wings as well, like very far out of the money puts and calls.
Like I
And
saw the most predominant calls were like a 200, like implied price via the index share option index. The share index was like 200K. Like there was some bid in $100 IBIT share prices, the long dated, call options, and there was predominantly also calls, right?
Yep, that's right. Yep. And at the heart of this too is this reality that I've been enthusing for folks to understand is Bitcoin volatility doesn't have to go down by its price going up. Like this notion that like the bigger the price number, now we're at 100K, therefore it's going to be less volatile because you need more money to move it. It's not the case at all, because every price setting is done by marginal pressures, especially for something like Bitcoin, where there are true supply shocks. And so what you've seen is, if you look at the realized vol from October to today, it went from 39 in the very early October to now over 60. So actually, you do have the ability to increase volatility with price going up. And I mentioned this as something uniquely important for Bitcoin because most assets do not behave this way. Um, the only asset class that sometimes mimics that pattern is commodities like oil. You can imagine why. Oil goes up, it's usually a crisis, vol goes up.
Yeah.
But oil is also a very systematically important input to the global economy and commerce. And so there are political reasons to suppress it. And eventually oil does therefore come down, even though it's a commodity, because it's actually such an important integral input to the global financial system and the economy. And I would argue Bitcoin is not there yet. It's actually not that important for anything beyond the fact that it's still in the early stages of its adoption curve. And so you don't have actors who are incentivized to bring Bitcoin back down for anything that has to do with like real life productivity yet. That could change again 10 years from now, who knows? But as I see it, this unique like nature of that imbalance between demand and supply means every time Bitcoin goes up with volatility, it just resets there. Like there isn't a reason it needs to come back down, and especially not like GameStop or AMC, where it's out of bounds with like the fundamental valuation. And so either short sellers will say, "Hey, AMC is not worth that much. I'm going to short it," or actually the company even says, as management, it's not worth that much. I'm just going to issue new
The
shares,
shares, yeah. Yeah.
which you can't really do it with Bitcoin at all. And so to me, it's almost the most perfect and leptocurtic asset that could benefit from options trading if you're positioning it thoughtfully.
Yeah, it's fascinating. This point to the gamma squeeze and why you could have these such aggressive melt-ups. And it brings it to that then, obviously, because was it what you termed the negative Vanna gamma squeeze, right? Yeah, because it's one of the few assets where you have the increase in volatility when you go further into the money. Um, so have we witnessed any of that yet? Part of this, the options, the option instruments and options dealers leading to a gamma squeeze in the past 2 weeks. Have you seen any evidence of that occurring, or is it still to be TBD?
Yeah, I can't pinpoint to anything within the ETF options world that has accelerated this week's price action. And it is important to note, actually, still at this moment in time, the crypto native preference to express leverage is perps. And I do think perps play a bigger role in the short term dynamics around liquidation as to driving intraday prices. But the thing about options that's different is that there's duration with options. So it's going to take time. What I mean is, perps are pretty instant in the ways that it brings price action. Uh, but derivatives like options build risk in the system over a long period of time because the things that are really out of the money that are 5 delta today, 2 years from now, can become 100 delta as the price moves with convexity. So options don't immediately introduce velocity, but they introduce the change of that velocity being much faster than even perps with duration, because perps don't have duration.
Yeah.
Those are just 8-hour instruments and it comes and goes. Uh, Options, I think, give you a chance to build it into the system. So I think we're still early. We're seeing trends of it. I saw actually yesterday a very interesting trade, which was on IBIT. There was a contract, the Jan 27 15 strike put that traded 10,000 times, which is actually a little less than half of the maximum capacity for any of these contracts, which is at 25K. And that delta is minus 3%. It is so far out of the money. $15 strike when IBIT's trading
Yeah.
at 57, right? And so you might say, wow, someone's really bearish on Bitcoin. They're buying a $15 put and you're paying $1.50. So what? Like you'll get a 10x payout if Bitcoin goes to zero. That seems insane. Why would anyone
Yeah.
buy that? And here, what you're actually seeing is it's most likely not a directional trade. This is most likely a financing arbitrage trade. And this is the other thing that Wall Street will now be able to do is find ways to arbitrage financing. This is actually the deep underbelly of how leverage works. And if you think that the put call parity is not aligning in ways that you can actually take advantage of that, you're going to start seeing some of these things happen. And Bitcoin's the perfect asset to do it because the things that mess up put call parity usually has to do with corporate actions. It usually has to do with imperfect information on things like dividends, uh, sometimes with things like share splits in ways where it's even though it's not direct, it could have indirect effects. And Bitcoin will have none of those things.
Mm.
It's actually quite perfect to be able to trade a boxed position synthetically. And I think yesterday when I saw that trade go through, it was a moment to say, wow, like it is happening. All these financialization that brings efficiency to the system is beginning.
Yeah, it's fascinating, and I'm curious, and this comes back to the point around specifically options on these ETF instruments, because obviously we've had crypto native options for some time, and I'm curious then in terms of why specifically for these kind of ETF options is there now a paradigm shift in terms of what TradFi can do compared to what they could have done with OTC instruments, the likes of LedgerX or any of the other dealers or Deribit, for example.
I love this question because it reminds me when people were saying Bitcoin ETFs would not matter because we
Mm.
have Bitcoin spot.
Yeah,
And I
that's
would
true.
tell them, actually, you're wrong. Bitcoin ETFs will matter, and you'll see. And the reason is entirely at some level structural. There are some financial reasons too, but the cold reality is many people want to access assets in ways they know already, and
Mm.
in a system and a compliance structure and a wrapper they're comfortable with. So the idea of even a retail investor who is not totally crypto native going on Deribit to trade options is actually somewhat farcical. They're not doing that.
Mm. Mm.
The person that's trading GameStop and AMC are not opening Deribit accounts. Now you give them IBIT options, and now I would say there's a higher Bayesian probability that they're going to start trading crypto derivatives.
Mm.
And that's what IBIT options and BITP options and all the Bitcoin ETF options permit in a regulated space. So that's the first thing. The other thing is you do eliminate counterparty risk with an OCC backed structure. That's important because I still think the ghosts of counterparty failures in crypto loom fairly large. And the beautiful thing about the Bitcoin ETF that I always remind people is you can actually lend out your Bitcoin in the borrow market and get paid than actually holding your spot tokens in cold custody. You may choose to hold it in cold custody for reasons that are equally important, but it may not be a financial one. But if you're interested in a financial optimization, I might say actually it's better to own the Bitcoin ETF because there's yield you can accrue from lending that is challenging with spot assets because those
Mm.
are OTC counterparties and exchanges. And of course, there are some good ones, but we all know there are also some bad ones.
Mm.
And Bitcoin ETFs, you don't even have to worry about it. It's actually it's an insured system, and options too benefit from some level having that halo. The third thing I'll mention, and maybe this is a good segue to talk about the SIBO Flex options, which is launching this week. People love speculating, for sure, but there is also a big cohort of investors who really want different kinds of payoffs using crypto volatility. So you will find degens who want max leverage, but you might also find somebody who's saying, can you create a structure for me where the maximum I could lose on Bitcoin is like 10%, but also I
Mm.
get to participate in the upside of Bitcoin? And derivatives, especially flex options that SIBO launched, will allow you to create a new kind of demand and a new kind of buyer for those types. So, for example, I was pricing out what a 1 year principally protected note could look like for Bitcoin. Meaning, if I buy this note, this ETF, you can't lose money. It's 100% principally protected, but you get to participate in Bitcoin's price action. And there's a cap, of course. The cap for a 1 year note is 11%. So you might say, hey, actually, I'm not in Bitcoin for 11%. So that's not interesting to me. I would say probably the same thing. But there's a cohort of investors who may be a little bit more risk averse, who's actually just looking to clear some kind of risk free hurdle. And they will say, wait, so you're telling me I can't lose money trading Bitcoin? That's right. Like you
Mm.
can't. Like the structure won't let you. And that's what structure products do. And then it'll literally bring in all the people who are scared of Bitcoin volatility to say, you know what? Maybe I do want to make a Bitcoin investment that will pay me 11, 12% in a year, because to me, that's still great.
Mm.
And it seems like it's going to happen. And if it doesn't, I don't lose any money. And so when you open that market, I think the TAM is larger than people assume. And I come from that business of structured products when I started my career at Morgan Stanley, and it's totally a wealth management dream to be able
Mm.
to sell volatility in that kind of way. And you could never do that on offshore exchanges like a Deribit.
Yeah.
You would never be able to structure and sell that within the institutional system of our wealth management industry on the back of broker dealers. It just cannot happen.
Yeah. So how much? So these ETF options, then, in terms of like in all these use cases you allude to in terms of structured products for TradFi, I'm curious. And you've also mentioned, of course, people trading it within their share trading account, regular retail investors. So if you were to say in terms of like who do you think are going to be the main users in terms of volume of these products? Is it mostly going to be on the retail side, taking punts on assets like punts on Bitcoin in their share trading accounts, or is it more on the institutional side who trying to create structured products for clients in the wealth management or elsewhere?
It really depends, I think, ultimately on the pace of adoption, right?
Mm.
which we don't know yet, and we will start seeing some data points hopefully within the year. Um, but ultimately, the question is who's going to move first, retail or institutional investors? And my gut instinct, to be honest with you, is retail is and always the first mover in these situations. And so I imagine we're actually going to live in a period of more call buyings than put buyings in the near term. But I could imagine that changing. As I mentioned yesterday, the biggest trade for IBIT having gone on was a deeply out of the money put for a financing
Mm.
trade. So things can change. Um, but this is when it really matters that the Bitcoin ETF is approved on all the bank and wealth management platforms, which till this day, it's not. You may see the news flow in which some broker dealers have still refused to really allow people to invest in Bitcoin
Mm.
ETFs. And so I see immense hurdles still to even access something as vanilla as the most successful ETF product in the world. That will mean that it's going to be a little slower than we would like. But in my opinion, that just means there's more opportunities for retail to take advantage of it now before
Mm.
that institutional flow occurs.
Do you think they'll be increasing the limit sizes on these options? Because right now it's quite limited, right, in terms of the amount you can buy.
Yeah, I think they will be. I think they will be. In fact, I mean, some of these are already kind of like near its limits, and it's only been like less than a month for these things to have gone live. Um, yeah, maybe a little backstory there. The reason why the OCC puts limits on these things is actually not due to volatility risk, as people might guess. It's a part of it, but the real risk is more structural, which is that they're worried about things that might break when these options have to be exercised. So if you have a lot of option contracts that are deeply in the money and it has to be exercised for assignment, and it's bigger than the trading volume in a way that creates friction on locate as to where you're going to find that inventory, that becomes like a different kind of liquidity problem that is like systematically like very bad,
Mm.
right? Because it's like a failure to deliver, which is like the worst thing that could happen on
Yeah.
Wall Street. And so they put these limits for that reason first and foremost. And what I would tell you today is for IBIT and all the Bitcoin ETF options, the contract position limit maximum is less than 1% of the total shares outstanding. Meaning it's almost inconsequential that that could ever be the problem. And there's much more growth for multiples from less than 1%. Uh, so I think it could happen. I also think it's possible one of the IBIT contracts actually already broke through the limit on the first day of trading,
Mm.
which is ultimately a kind of a liability market makers have to take. But it shows you there's a lot of demand, and that shouldn't be a frequent thing. So they're going to have to revisit the underwriting of that box. Now, one more thing I will add. I think it's actually a great opportunity for retail in some sense too, because we do have lots of options for lots of Bitcoin ETFs, which has never happened before. If you think about it, you have multiple volatility surfaces that essentially track the same underlying commodity, right?
Mm.
You have GLD, the ETF, and it has an options cover, whatever, but you don't have like six of those. And and because of that, I think there is some subsidization, if you will, that investors will have to diversify their option risk across multiple issuers, which is great in my
Mm.
opinion for our peers and our competitors. But for retail, it also means that every now and then you'll find, if you're smart and diligent enough, mispricing along those curves, and especially the illiquid contracts. And you may be able to put on relatively better value trades by being careful about the issuer
Mm.
that is the ticker. And so I think there's just a lot of things that could be happening right now for this moment in time, which is pretty unique.
Yeah, indeed. So obviously now everyone's talking about the Bitcoin ETF options. We do have other crypto ETFs out there. So I am curious, do you think we will see options on other crypto, specifically ETFs, for example?
Great question. I think we would. I don't see why not,
Mm.
especially because the ETH ETF today does not have staking as a component.
Yeah.
But this is a reminder to all of us that ETH and Bitcoin are now fundamentally different consensus mechanisms that have different value accruals that once upon a time did not. And so sometimes I do think that it's a little bit of an accidental history that ETH was part of the dialogue for these ETF approvals, because at the time these conversations were happening and the futures were listed, it was still a proof of work consensus mechanism asset. Of course, now you and I, we all know it's not, it's proof of stake. But proof of stake creates different value accrual mechanisms that is entirely new for a financial asset that has some implications for things like options. So, for example, we know dividends is a component of Black-Scholes in pricing the options curve, right?
Mm-hmm.
And that's because dividends represent a value extraction of the residual permanent capital vehicle with a long-term multiple. If you think about staking, even though it's not dividends, it's similar. There is some kind of cash flow event that is happening on this asset that looks like something Black-Scholes would have to take into account, which I think is quite tricky. And so there's ways you imagine it's doable, but it is not actually an easy exercise at all. Especially because staking is not a static number in itself. Like dividends are modelable as discrete static events. So going back to your original question, if ETH ETF does not stake and do any of the things that proof of staking has brought upon as a conduit that proof of work did not, then I think it's possible we'll have an options curve and all those things the way it looks like Bitcoin. The thing I don't know though is what's more important. Do we want to bring staking into the ETF? I would say yes, we want a total return product. We should have the ability to stake ETFs, but then that might bring more complexity to thinking about options in general. That's more from a financial practitioner's perspective. From a regulatory perspective, my guess is if staking is approved, then there's nothing about options in itself that is inherently going to be problematic. But I don't know. You never know with crypto, right? I mean, special dividends is always the thing that screws people up with options. Like if there's a surprise special dividend, it wrecks the options market because no one expected it. And so if you think staking might have that kind of volatility where like staking yield like behaves very erratically, then who knows like what kind of concerns might arise out of that, which I don't think it will. It obviously hasn't, but this is like the new frontier of proof of stake assets having an options market.
Each staking rewards aren't that volatile, right?
No, it hasn't been.
So it shouldn't be. I mean, we'll see. So now, obviously, going back to the talk of the town today, obviously, moving beyond just options, just on terms of price. Of course, today you speak on the day that Bitcoin has broken through 100K. So it's a massively important moment for the industry. So I guess my first question is, being honest, did you think this would happen this year? I mean, from the beginning, or in terms of your earlier, thoughts and predictions in terms of where? Because I know Bitwise you guys had firm-wide predictions that were pretty damn spot on in terms of especially first break into 70K and 80K. So I'm curious in terms of like, did you think we'd get to 100K before the end of the year?
I hoped for it. I did think it's possible, and I posted about options trades to take advantage of that happening. So you look at my Twitter from maybe 4 months ago, I proposed the idea of trading these digital call spreads at 100K, which would assign the probability of Bitcoin hitting 100K at the time to be less than 20%. It was something around 18%. And I thought, hey, this is a decent 5-to-1 payout for an event that I think might happen. And 5-to-1 is the odd I would take for it. So your question to me is one which I would reflect back upon to reinforce. I don't think very deterministically as a person, right? I don't think about events as a black and white thing. I do try to bring some probabilistic conditionality to imagining the distribution of outcomes. And I would say I have.
You run the EV calcs and everything. You run the EV calcs and everything, the expected value.
Yeah. That's right. I think volatility itself is too one-dimensional in some sense to capture really what Bitcoin is so beautifully representing, which is a wide range of outcomes over a long period of time. So I did think it was going to happen at some level. In fact, I think I even posted that Trump winning would send it to about 92K.
Yeah.
Based on Polymarket odds that I was looking at the delta between Bitcoin price and Trump's odds, even though it's not totally the most accurate science. And I was also pleased that it happened. And 92 to 100 at that point, the magnet, the
Mm.
psychology of the magnet is inevitable. Which of course, we tested it a few times, and then the question was like, are we going to break through it? And that it's hard to know if you can imagine it
Yeah.
in a period less than a month. But I'm so glad we did.
Yeah, likewise. And when obviously breaking to that level, obviously the part of the reason it was struggling initially was because of all of the cell walls that we had at such a key psychological level. So I'm curious now that we've broken through it. Um, do you have an idea of what things could look like in the next few months, especially if we do have these gamma squeezes and melt ups, or if we do start seeing I was speaking on the regulatory front, or from this nation state front, if there is going to be this Bitcoin reserve, and if other nations are going to start accumulating. So I guess it's like, yeah, how do you see things playing out for the next 6 months or so, going into Q2 next year?
The thing about 100K is that it's just a nice, beautiful number. And I know it's unfair to think that humans are so undeveloped to think that psychologically should not be that important, but it is. And the reason I know
Six
this
figs,
is
bro.
because what's that?
6 figs, man. That is, yeah.
A
That's
whole
key.
number,
Yeah,
and it's easy to remember them, and it looks nice. And so
yeah.
when we break 100, when we break 10,000, when we break 1,000, all these things actually do create psychological floors. And I share with folks that I think others have in the well. Bitcoin is one of the only assets where if price goes up, the risk goes down. And then some people will say, like, what do you mean? That makes no sense. Of course, it's riskier if the price went up. And I would say no, because Bitcoin at 10 cents was much riskier than Bitcoin at 100. And Bitcoin at 100 was much more riskier than Bitcoin at 10,000. And now we're at the moment where Bitcoin at 100K is less risky than Bitcoin at 10K. And so it does psychologically create this effect for demand at these new floors that I think will give us some buffer. Once psychologically you've breached it, people will trade around it. So if we go back again down below 100, people are now going to think it's value. So you'll see a bunch of people like, oh my God, it's at 97K. I got to buy it because I know it's going to go back to 100. Like the magnet is there. And so the thing that's really exciting is Bitcoin is actually exponential because it represents a commodity that is not rooted by anything but the value of time. And the value of time is a root function in the options world. And volatility is a variance calculation at some level by the square root of time. And so now you can imagine the 100K to a million really easily. And then, you might look at me and say, wow, that sounds crazy right now. And I would say, yeah, it's because we're not there yet. But people said the exact same thing when we were at 10K. And then we told people we'll go to 100. And it repeats itself in this way where the psychological floor is really key.
Yeah, okay, key point there. And this was a perfect segue then in terms of my next question. And this is, what does this mean for Bitcoin's market cycle? Because Bitcoin's gone through this market cycle, this 4-year cycle, is centered around this halving, and this concept for many years. But now, given the mass amounts of adoption and the entire paradigm shift, and I would say Overton window of Bitcoin shifting in terms of minds of people, and especially now when we're talking about it from a nation state adoption perspective, do you think that the 4-year market cycle theory is kind of dead with this, at this point in time? So we're just going to go up and up and up into a super cycle, or do you think we will retrace at some point and it will continue around
Yeah.
this market cycle?
Yeah. I have not actually, I think, shared my view on this publicly, but I would take the bet that the 4-year cycle could be broken.
Mm-hmm.
I think it could be. There are ways in which it was self-reinforced by things that were native to Bitcoin, with the halving and other ways to imagine it. But the reality is, most of those cycles also coincide with like price action and profit taking of a particular cohort of investors. So like when you look at the moving averages of Bitcoin as a realized market cap versus the actual traded market cap, which Glassnode provides, it's one of the best proxies historically to tell you when we're at the top of the market, because it's a way to see how much money people have made. And the more people make money, the more likely, of course, they're going to sell. The reason, though, I think this time it could be different, and I'm willing to bet on the possibility of it, is because we have actually, for the first time, introduced a new set of buyers in this cycle in a way that was not possible before. And the behavior of these buyers look a little bit different than the short-term profit-taking investors of, let's say, a Bitcoin whale or an original investor, etc. These are now investors who are putting it into retirement accounts. They're putting it into potential wrappers that introduce into pension funds or institutions. And so they're not actually the kinds of investors we've ever seen. That's why you have to make room and take some humility in the possibility that the 4-year cycle is not going to repeat itself. Now, if more people psychologically think and it becomes self-fulfilling, that's something we all have to measure and assess as we live in the trading environment. But maybe it is part of my job to also then enthuse the notion that it's not going to repeat itself, because of the reality that we have a totally different cohort of buyers today. And we don't know just exactly how they're going to behave the ways that in the past it was fairly limited, almost PvP world of crypto natives.
Yeah, exactly. So it's if countries like the US, for instance, if they, for instance, are able to pass the Bitcoin reserve, it's like they buy in for a strategic reason. It's not necessarily to sell and make a profit at any level. It's just mass accumulation, right?
Right, right.
And also, I suppose, there's a question around how one thinks the halving itself, which is, as we go through numerous different halvings, the impact on the supply side becomes negligible, right?
Mm-hmm. Mm-hmm.
Yeah.
Yeah. The other thing with the 4-year cycle historically is that it tracked like the macro environment as well for the US in terms of easing and hiking cycles. And the other thing, timing wise, we're a little offsides, is I do think we are entering an easing cycle at this moment and will with the Trump administration. And so that introduces a kind of new volatility that, again, is a reset of the global monetary world order that might not look like anything that systematically would have been representative of a trend. This is a moment where that trend's going to break. Like, Trump's going to do new things. He's going to exert new kinds of fiscal dominance. He's going to bring new kinds of supply shocks to China via tariffs that used to actually export disinflation. Now we know China does not export disinflation at this stage. So it's a whole new like macro regime, and also the pulse of the economic cycle globally and in the US. So we have to be open-minded and take the view that it just is going to look a little different this time than the past, because it's entered the public conscience. Bitcoin's now entered the public conscience this time in a way that it hasn't before, that brings in new kinds of behavioral biases and institutional flows and sovereign actions, as you've described.
Yeah. Which country do you think is the next, if you were to hazard a guess, that would announce they want to accumulate a strategic Bitcoin reserve now that the US has taken will take the first move, if you were to hazard a guess?
Yeah. My guess is it would have to be a country that is either neutral or an enemy of the United States. Because the other thing that is missing in the dialogue of the treasury asset conversation really is, and the idea of the U.S. Treasury buying Bitcoin as a strategic reserve asset is not actually the mandate of why the Treasury reserve assets in themselves exist. And so if you think about that for a second, why does the Treasury hold anything? It holds it because the role of trade is so important for global commerce, and sometimes the FX market is disrupted by volatility and requires intervention to facilitate global trade. And so that's why the Treasury has all these currencies. It's not because they're thinking these currencies are going to go up. They're there to facilitate trade and bring smoothness. People say, well, it has gold. And I would say, yes, it does, because gold once upon a time backed the dollar. And so that's more of a legacy in which it once served a role that it no longer does. But it wasn't bought to be a store of value for the Treasury. So the introduction of Bitcoin requires a reset of expectation in the sense that the treasury has a job. It has to be related to some function of trade and alliances as such with our global trading partners. It's not there to help solve America's balance sheet problems. That's not the constitutional mandate of like a
Yeah.
treasury function. So if you think about that, my view is that actually it's going to be a little bit more time consuming for the US to actually do it at the federal level because it's going to require, in my opinion, and this is just my humble opinion, some multilateral coordination with our allies. Uh,
Yeah.
I do think the states might be able to do things on their own because they don't have the same federal representation to Japan and China and all these countries we interact with. But at the federal level, it's hard for me to imagine America going rogue on this without some kind of buy-in with a mindset with our partners and what this represents as a movement. So you almost need like a Bretton Woods-esque reset where everyone comes to the table together and maybe do it together. Otherwise, you can imagine a lot of people would take some misinterpretation of that action in a negative way, especially if you're a trading partner like Japan. And
Yeah.
so, going back to your original question, I think the mover has to therefore be someone that's not related to the American complex. It could be Russia, it could be, it could be another South American country that doesn't have close
Mm.
ties. Like it won't be Mexico. It probably won't be Brazil either. These are too important. But if you're just kind of like a nation state that's not that critical into the global trade apparatus, I think that's the other maybe factor I would use. Non-American or neutral American plus a country that is not significant to global commerce.
Okay. Yeah. Well, yeah. I mean, there's many steps to go before we get there. Actually, obviously, still has to go through Congress, right? So and there's quite a few hurdles there. But it's a good thought experiment.
Totally.
So, Jeff, thanks again. Thanks so much for coming on. I think that brings the end this discussion. It's been a fascinating discussion, and definitely like to have it at some point again. Where can people follow your thoughts? Obviously, as I mentioned, you're very prolific on Twitter. I'll link to your Twitter below. But is there anywhere else people can follow you apart from there?
Yeah, so Twitter is a great place. I also have a link to my Substack on the Twitter
Okay,
profile, and sometimes
I'll
I
share
post
some
different
time.
contents on my Substack as well that people might find interest in. So those are the two places.
Yep.
And
Yeah,
yeah,
okay,
please
guys. I'll
reach
link
out.
to that below. Yeah, no, I'll link it below. And yeah, I'd say again, it'd be great to have you at some point to get the Kicker Brain with all the alpha back on the channel. But thanks again, Jeff. Really appreciate it. And yeah, enjoy this 100K. Enjoy it. We've
Let's
earned
enjoy
it.
it.
Yeah.
Let's enjoy it. Take
Cheers,
care,
man.
Nick. Thanks.
Thanks.